Let's get more from Greg Gibbs. He's the foreign exchange strategist at RBS Australia, and he joins us from Sydney this morning. Greg, first off, were you surprised by this move from the Swiss central bank?
Yeah, it was very surprising news. It certainly gets the blood pumping. It's one of those moves which feels quite historic. I can't recall another central bank making such bold action. And, it could actually be quite an important event for global markets.
Okay, a current and a big event for global markets. What does that mean? Are we going to see similar moves from other central banks as well?
Look, I think we've got to be watching the Japanese now very intently. If we recall back in early August, the SNB made some policy easing measures. They targeted zero rates at 3 months and said they were prepared to do more action on the currency. And the day that followed that, the Japanese government intervened very aggressively in the currency. The BOJ shortened its two-day meeting and expanded its quantitative easing policy in what appeared to be, very much a coordinated move. Now, the BOJ actually finishes a two-day meeting today. We're in a very similar situation. I don't think perhaps that they won't be prepared to move today, but certainly, there's a G7 meeting on Friday. They may want to wait till then, but I think the market will be intensely watching the Japanese now to see whether they implement a similar type policy.
Yeah, dollar-yen right now strengthening. We're looking at the yen gaining about 0.25%, so that's kind of a spike right now for the currency itself. So we heard from the Swiss central bank saying it'll do all it can, sell as much currency as it can to keep the franc in check. I hardly believe that they actually have that kind of cash, that kind of firepower to keep it where they want it to be. I mean, look what happened with the Japanese yen. It came back to levels just a few days after the BOJ stepped in.
Susan, I actually think this is very credible policy. Really they have unlimited capacity to sell their own currency, and rates are at zero, so there's no cost to them in doing so. In fact, they can actually make money out of it from a carry perspective. They have inflation, which is almost in deflation. They actually had some inflation data out overnight, and on a harmonised basis for the EU, it's negative. Their economy is being negatively affected by the strength in the Swiss franc, and very few people would actually argue that the currency is not significantly overvalued. So it's quite a credible policy. Probably the least credible aspect of it, actually, they're linking up to the euro, which is a currency which has the greatest downside risk in the markets. But I don't think you should doubt that the SNB will hold the line at this 120 level, and will do so with much force.
Okay, Greg, quickly, in reaction to this move from the Swiss central bank, what's the best bet then in the currency markets?
Well, I'm thinking about you've got to get back into Asia and in commodity currencies like the Australian dollar. Where do you go for safety now? More money is going to be channeled through to Asia, increasingly so. In fact, you may even see the US dollar do better within the G3 space. It's possible quantitative easing measure later this month may even appear a little bit limp-breasted compared to the SNB and some of the policy moves we're seeing elsewhere now. So, I think basically look at Asian currencies, look at commodity currencies, but the euro, to my mind, is still is going to be the laggard out there.
All right, Greg, thanks for joining us this morning. Good to see you. Greg Gibbs of RBS joining us from Sydney, Australia.